the slides. Yes. Okay, so this is our webinar number 2, and I'm your facilitator, facilitator Faustina Caserera. I am a CASA, as previously indicated. Yeah, so we can proceed. Okay, as previously mentioned, if ever you have any questions, to ask any questions on the platform. So it will benefit other students. If you ask questions, you find other students will also be able to benefit. Okay, administrator, the person who deals with technical and admin issues, it's Grace Mukuru. So if ever you feel like you are having issues with uploading your assignments, you can get hold of Grace, and then she will be able to assist. Okay, and if whenever you are late with your submission, just make sure that you assignments or an email and explain to her, and then she will open up, because we do not have the powers to open the platform whenever an assignment is closed. So Grace will be able to assist with that. Okay, our webinar 2, we're going to cover mainly or mostly, we're going to look at trust investments, we're going to look at correspondent transactions, we are going to look at conveyancing transactions, and then we are going to have a look at VAT and other taxes. But our thrust will be on VAT. So these 4 topics are the ones that are going to constitute our assignment 2. The form part of our assignment 2. But as you know, this is bookkeeping. We go back to basics. So our back to basics, it's one is to be able to prepare a cash book. I am so happy. In our assignment 1, most people, I would say 90%, were able to prepare their cash books. They were able to score all their marks on their cash books. I think I had 3 or 4 students who were doing vice versa of the transactions. So you would find where the firm is receiving money, they would treat that receipt as a credit in the cash book. And then where the firm is paying, they would treat the payment as a debit. So with a cash book, one thing that you need to know, it's our cash account. It's more of like our cash account. So what you need to do to remind yourself, instead of writing debit and credit, rather write receipt and payment, what we illustrated on that green-blue example of our ledger, so that you won't have to miss out. So when you're applying yourself, if ever we are told that the firm has received so much, then we know it's a receipt, it's the receipt side, which is the debit side. And where it is a payment, then you know it's going to go on the payment side, and it's a payment. Just pardon me, I just want to the mic for the person whose mic is not off. Okay, thank you so much for your patience. Yeah, I will go back to our slide. Yes, so I was discussing cash books and ledgers. So cash books and ledgers, they will always be there. They will always come, because whatever that we are doing, we have to prepare a cash book. And in our case, because we are in the legal fraternity, then we have to have a trust cash book. We have to have a business cash book. So those ones are going to come no matter what. And so to complete the double entry, once you post something in your cash book, for you to complete the double entry, then you have to post in a ledger, like what we illustrated last time, to say here is a transaction. For it to be complete, you have to identify the cash book in which you post it, and then from that cash book, the other second leg of the transaction has to go to a ledger. So if you are dealing with trust transactions, you know that there are only a few ledgers that are prepared. So the first one, we have our cash book, which is our trust cash book. And then the next one, we just have to have trust creditors ledgers or matters ledgers. So our creditors, we create ledgers for them. Whatever that we have received on behalf of a client, we create a ledger for that particular client. So whenever we are transacting, whenever we are paying or receiving on behalf of a client, which is our trust creditor, then we post that transaction to our ledger. Remember, whatever that you are receiving, when the firm is receiving money on behalf of a client, it is a receipt. It goes to the receipt side, which is the debit. And to complete, we have to credit. So we are crediting our client. Hence, we call them trust creditors, because at the end of the day, the trust owes them money until we account and take our fees, or until we receive and pay on behalf of our creditors. So remember that. So the trust account is so simple, it's so easy. So you should score high on the trust account, because it only affects the cash book and the creditor. Then we have legal practice fidelity fund. So that one, when it comes to interest and the bank charges and anything that has to do with interest and bank charges, what we do is that we treat everything in the account of the LPFF. Okay, so that is our other creditor besides our normal creditors who are paying into the trust account. So whoever pays into the trust account, they have to be credited for that money that they've paid, or whoever pays on behalf of our client. Then we identify our client, we credit our client. So you should remember that, because that is crucial. That is what we, more of like our basis for answering our questions. So we start with the cash book, we go into our ledgers, we go into the business cash book, we go into our various ledgers. As we have explained in our question one of guys, what are ledgers? And then some could go further and say, okay, there are income ledgers, there are expenses ledgers, there are asset ledgers, liability ledgers, equity. Okay, so if you look at those various ledgers, then you should know the accounts that affect those ledgers. If it's income, in our case, because we are law firms, we are advocates, our income is basically our fee. So whatever that we invoice to the client, that is our fee, that becomes our income. And then if ever there's any other thing that we like, other income like interest, then that becomes other income, because it's not related to the core business of being a legal practice. So it's treated as other income. If a payout from insurance, say for something, then that becomes other income. Okay, and then expenses, it's
sorry, ma'am.
Yes.
Are you still on welcome page? Because we are just seeing welcome page here.
Yeah, I'm just rehashing for you guys. I'm just rehashing.
Okay.
Yeah, I'm just rehashing to say, for our next assignment, you find our assignments, they are based on the basic principles. So I'm just rehashing to say, like, I'm going to skip the cash book and the ledgers because we have done them. So remember, that is our principles, and then we are moving on. I'm not going to touch on that. We move on. We look at the trust investments, corresponding transactions, and then we post them in the cash book, in the ledgers. Okay. All right. So our investments. This is very crucial. We need to know the various investment accounts that a law firm is allowed, or a legal practice is allowed to invest. A trust account practice is allowed to invest in. Section 86(1). Section 86(1) deals with our trust account. It just introduces that a legal practice have a trust account. So then it goes into saying section 86(2), that's where then it stipulates which trust account, which is the one that is the general trust account that everyone can pay them. 86(3), it's preferably it should be a call account. When everyone's available, say goes to the fund. And then section 86(4), this one is particularly for clients. What about a section 86(4) account is that it is protected by the attorney's fidelity, by the legal practice fund. It is protected in that if ever anything happens to the funds, they are misappropriated, then the fund can replace or can pay over the money to the clients. You know, it is a fund of last resort, but at least your clients will be having some insurance of some sort. And then interest that is earned in a section 86(4) account, 5% goes to the client, and then 5% goes to the fund. So what the fund is done, they've managed to enter into agreements with banks. In them entering with agreements with banks, you find if you open properly your section 86 account, then automatically the bank will pay over the 5%, and then you are left with the 95%, which then according to your agreement with the client, if you agree you're going to charge an admin fee or some fee of some sort, then the balance goes to the client. So usually you'd find to the client you are paying at the end of the transaction. This is an account that is opened when there is an underlying transaction. There should be a legal transaction that is happening. It can be litigation, it can be conveyancing, and then you open a section 86(4) after receiving instructions from your client. You need to have instructions. You need to be proactive as a legal practitioner. You need to be proactive. Tell your clients that there's an option. I can see your money is earning interest and interest is paid over to the fund. You can benefit if you can invest this money. So the rules of having a section 86(4), it can only be controlled by the legal practitioner. 1, 2, the money should be paid first in the trust account. So money should come first in the trust account, and then you go to the bank. You open specifically for that particular account. So each client should have their own account, 86(4) account. And then at the end, you control the funds. When the transaction is finalized, you recall the funds, they come back into the trust account, and then thereafter account to the client, and then you pay over the interest, or if agreed, you can utilize the interest to offset against any shortfall that the client might be having. And then you can tell the client to pay the difference. Okay, so that's a section 86(4). And then also there is what they call an investment practice. So as a law firm, you would find, as a legal practice, sorry for that, you are allowed to invest on behalf of clients, but you find such investments, there is no recourse, there is no underlying transaction. So if a client comes, or if you run a scheme where you are investing on behalf of clients, and there is no yes. Hello, okay, I'll proceed. And then there is no underlying transaction. Then you can invest according to Rule 55.1, and then you see the requirements. There are auditing requirements. There are also reporting requirements that are there. And the thing that you then let your client know is that there is no recourse. You can't go to the fund and ask them to pay if ever anything happens to the funds. Okay. And the funds covered by the Fidelity Fund, it's your trust account, your Section 86.3, and your Section 86.4. Those are the ones covered against misappropriation. Okay, we'll run an example. We'll work on an example on trust investments. So usually they are part of an underlying transaction. So in our case, we'll do a conveyancing transaction, which will then see how to account for funds that are invested. Okay, I'll move on to correspondence. Okay, corresponding transactions. So in the legal fraternity, legal industry, you are given jurisdictions in which you have to operate. You can't go and do business in another jurisdiction like an attorney or an advocate. I don't know about advocates, but I know of attorneys in Johannesburg. If they want to go and do business in Limpopo, say for example, or in Cape Town, then they have to appoint another firm, or they call it their agent or their correspondent. So that firm is the one then that would handle the transaction on behalf of the client. Or your firm can also be instructed by another firm in another jurisdiction. They handle the transactions together. Okay, in such a case, when it comes to fees, so there's an agreed fee, more of like sharing formula. So for fees, they say the instructed, the attorney or the practice that is instructing is going to get a third of the fees because the work has been done by the correspondent or has been done by the agent. So the instructing firm gets 1/3 or less than 1/3. So it can be, they can agree on 20%. 20% is less than 1/3. They can agree on 10% to say, after I've done the work on the end, I'll pass on 10% of the fees. And of course, remember, say for instance, we are collecting on behalf of a client somewhere else. So there's a need for the firms to account. So both firms are supposed to account basing upon what they have received. So the maximum fee is 1/3, or it can be less than that, or it can be agreed that work is done and then their fees not shared. Okay, and usually with our corresponding transactions, you would find there is VAT implications. So if a firm is not registered for VAT, then they cannot charge VAT to their client. And in such a case, there is no also VAT which is going to be passed to the other firm. If the firm is registered for VAT, then it charges the client VAT on the fees. And then after that, VAT, which then they have to pass to the fellow attorney. Okay, just hold on for me. I want to again try to mute. Okay, Ralebelwana, may you mute? Thank you. Thank you. So that is our corresponding transaction. So I'll illustrate. Let me try to be fast so that we can work. I would rather do practical work because that is what you're going to do in your assignments than talking, because I guess these things you do understand them. Okay, so let's move on to our conveyancing transactions. So conveyancing is to immovable property. Like we've got what we call in law firms or legal practices that are just concentrating on conveyancing. So with conveyancing, they are assisting their clients to transfer property, immovable property, from the seller to their client. The client can be the purchaser, then they move the property from the seller to the purchaser. So the conveyancing process requires that a conveyancer money on behalf of the transaction, and then make sure that they lodge documents, and then after lodging documents, then they can be able to pay the funds. So in that conveyancing transaction, there's usually a process, and the process usually is as follows. From a seller, or they receive instructions from the estate agent. So usually the client of the firm is the seller. Usually the client is the seller, or it can be an estate agent, or it can be another attorney or another legal practitioner who is instructing the conveyancer to do the work, the transfer on behalf of that firm. And then they receive the documents. After receiving the documents, they draw the transfer and bond documents on behalf of the clients. So usually relate to the purchaser, because the purchaser is the one that is obtaining a bond in most instances where they are not paying in cash. And then the conveyancer would make sure that they obtain guarantees, or in instances where the seller is selling a property which is bonded, which is got a mortgage. So in that instance, then that bond is sold, and then for transfer to proceed. So that is what the conveyancer facilitates. And then also the conveyancer makes sure that they receive payment, usually for deposits, the deposit, or if it's a full payment, they make sure that they receive the full payment. The full payment is received and paid into the trust account. So during the process of facilitation, you would find that's where then investments are made. So if the purchaser then instructs, it is the purchaser who instructs, because the purchaser is the one that is putting in their money for the deposit, instructs the conveyancer and say, okay, while least you are drawing up documents, you are cancelling, you are obtaining it transfer, getting the clearances, I am instructing you to invest this money according to section 86(4). So the conveyancer will receive that instruction and invest the money. Okay. So they receive that money, they invest it, and then in the process, they also receive money. If the property is above the threshold for transfer duty, they receive money. They also go onto SARS e-filing. They obtain, they capture the transaction documents, and then come up with transfer duty that is payable to SARS. And then when they receive that money, they pay it over to SARS, and also they facilitate to obtain rates clearances with the municipality, as well as levy clearances with the board corporates if ever they do apply. And then after they've received everything and they are satisfied, liaising with the bond attorneys, they lodge the documents to the deeds office. Documents probably takes 2 weeks, 3 weeks. Then we are the seller and the purchaser are notified that the registration has gone through. So once the registration has gone through, then they can make payments. They start, they receive payments in terms of any guarantees for the bond. And after receiving payments, there are rules in which banks who are guaranteeing a transaction are told to pay within 48 hours. They're supposed to pay, and within 48 hours, a conveyancer is supposed to also pay over to the seller, they also pay to them, they also pay to the purchaser if ever there is any refund or there is any interest that is earned in the trust account, in the investment account that is supposed to be paid to the purchaser. So we'll treat this would be more of like our transaction, a conveyancing transaction. So it will touch on investments, and then we need to then account for such a particular transaction in our books. So we can have several of them. Actually, you can have a lot of conveyancing matters. Then you need to account for the various matters in the books. Okay, and the other transaction is to do, the other topic is to do with VAT. So VAT, value added tax, you would find value added tax, it's an indirect tax. It's explained as an indirect tax. Why it is indirect is that it is levied on services or on goods supplied. So in our industry, which is the legal practice industry, we provide a service to individuals, we provide to companies, we provide to government. So once we provide our services and in a period of 12 months, we exceed 1 million in terms of fees that are coming to the firm, then it says that the law firm has to register for VAT. So once the law firm registers, then it continues. And then if you can read the VAT Act, there are other terms and conditions. There is, it's law. There's a lot of law that is applicable, but the basics is that after reaching 1 million, then a firm has to register for VAT. So currently the VAT rate, we have a VAT rate of 15%, which means once a firm registers for VAT on whatever matter that they are handling, whatever transaction that they are handling within the borders of South Africa, they have to levy on top of their fees the 15%. And then this 15% is collectible and it's payable over to government. Okay. So we have to be wary and aware of that, because you find SARS, which is the South African Revenue Services, of late they've been following up. Like now, I saw they say they've requested a database of all legal practices of all legal persons, and they want to make sure that they verify that information with all the taxpayers. So they are trying to get into making sure that people comply. So if ever you see your firm is exceeding 1 million, then you notify them that, okay, it's time. We are supposed to register for VAT. And then when you register for VAT, then you start levying VAT. Okay, and usually there are terms and conditions that then apply. Okay, and then the standard rate, like I've said, it's 15%. And then there are certain goods and services that are allowed to be billed at 0%. Usually, in our case, say for instance, we offer legal services out of the country. Say our firm, we go and consult out of the country where the benefit is not here in South Africa. Then in such a case, when you are invoicing, then I guess you are allowed to invoice at 0, but usually 0 rated, it's applied on exports. So with VAT, it's a consumption of a tax. So when I'm saying consumption, whoever consumes, like it's supposed to, at the end of the day, affect are consumed outside of South Africa, then those goods are not supposed to be charged VAT. So usually then they say a vendor has to register for import and export license, so that when you're submitting your declarations, then they are able to pick that this is true, because they can call for documents that they say okay, bring the documents to show that the goods left South Africa and they went out of the country. So those are zero rated. The zero rated, we've got like our bread. There are certain things that are categorized as zero, like our fuel items. You'll find we are not charged VAT. Everyone is not charged VAT. It's just to make sure that they are not taxing on basics that are needed by people who are not by I would say poor people or people of a certain income, but of course it benefits more of like everyone. Okay, and then we also have got exempt goods and services. Exempt goods would be more of like your transport. So you find for those who offer passenger transport, they do not charge fee. For those who are building RDPs on behalf of the Department of Housing, you find they do not charge VAT because this is according to the Act. So all these things, they are in the Act. So one is to read the Act and then know what the Act exempts. So there are guides which are there for VAT, which you can just take, then you go through. Okay, and then terminology. Okay, so when we are computing our VAT, we have got what we call output VAT and then input VAT. Okay, so output VAT is VAT on our fees. That is VAT on our fees. So they call it output. So that is our that is our final product. At the end of the day, we are working, we buy stationery, we do a lot of things, but at the end of the day, we sell our service. So that is the output of the law firm, to sell their service, their labor, and that is where we charge our output. Input VAT is VAT on items, goods and services that we are buying as a law firm for consumption. So when I'm saying for consumption of the law firm, so if you are running a matter and you receive an invoice from an advocate on behalf of a client, so the VAT on that matter, then it's not a consumption of the firm. You see, it is VAT that is chargeable to the client, though of course it's difficult for the client to then claim the VAT, or maybe in our bill we then pass it over to the client for the client to be able to claim the VAT. But in such a case, then it's not consumable by the firm. Treated as input VAT for the firm. We are looking at our stationery, our bank charges. So you find the bank charges as, and then there's VAT, and then we have our telephones, we are charged for that service, and then there's VAT. So at the end of the day, for us to compute VAT, to see what is payable to SARS, every 2 months period or every 1 month period, depending on the period that you were given to submit your VAT returns, then you have to compute your output VAT. That is then all your invoices for the period, or all of your receipts, money received for that period, depending on the method that you are using, less any input VAT. So this is VAT charged to the firm that is allowable. And then the difference between the two is what is payable over to SARS. Okay, I will illustrate, I'll show you. And then the VAT periods are determined by SARS. So when one applies, when a law firm or any company or anyone applies, SARS is the one that the system automatically just grants and said these are your VAT periods. But in the application process, you stipulate to say, I want a 1 month or a 2 months. And then 6 months period, it's for farming. It's for farming. So for legal practices, so it's a 1 month or a 2 month period. And then every 2 months, you have to submit your returns and pay over. So one has to account for the transactions, like what we said, we have to account to SARS. Okay, and then the basis for computation of VAT for all companies, whether it's a personal liability company, a non-profit company, a private company, all companies are supposed to account on an accounting basis. Accounting basis, it's invoicing. It's called invoicing basis. So invoicing basis, it means once a firm invoices a client, they are supposed to take that invoice, whether it was paid or not paid. They are supposed to take that invoice, put it as part of their output VAT, compute and pay over to SARS. In those 2 months categories, or 1 month, make sure you pay. And then there is an allowance to say for individuals who are running their firms. So it's partnerships or your sole practices where there's only one person running the firm. They are allowed, if ever they are receiving income or fees of less than 2.5 million, so it's 2.5 million, then they are allowed to wait for payment. When payment comes, then they pay SARS. When payment comes, they pay SARS. So their cash flows are much better. They are manageable, unlike those ones of companies. So VAT affects cash flow. So if you're a company, you have not received payment, you still have to pay. Individual, no payment, you don't have to pay SARS until you have received payment and then your account. Okay, so that is our VAT. And then let's move on. We're going to move on to an example. Before we can take a break, let's take a 10 minutes break. And then I'm going to showcase the example for those ones who want to stay in. And then from there, we continue with our example. It will take a bit of our time. Thank you so much. Any questions? I'm available for those to post any questions whilst we are taking a break.
Good afternoon, ma'am. How are you?
Yes. I'm all right. How are you, sir?
I'm very fine. Thanks for asking. Look, ma'am, I just want to find out if maybe those who did not manage to submit the first assignment will be they allowed to maybe submit or is it closed? Is closed. We cannot submit either.
Yeah, assignment number closed. It's closed. So if you have not submitted, because we even published the solution, we've published it. So it's difficult for me to say we'll open it. You say it's difficult, but what can like what I've explained before, for you to pass, even if you miss one assignment, you make sure you attend your test, you submit 2 assignments. For you to get 50%, you will definitely get 50%. So you just need to do well in your other assignments. Okay, is that fair enough?
Okay, no, it's fine. It's fair.
Hi, hello.
Thank you.
Okay. Hello, how are you?
I'm fine, and you?
Hello, yes, I can hear you.
Okay, just a question. Why is it for businesses that are currently running, they have to register for VAT in any event and do their VAT returns every 6 months? They don't have to earn a certain income in order to do so. It's irrespective, but advocates and attorney firms or law firms as such, they have to first be earning an income of 1 million before they can register for VAT. So is it in fact that they are exempt for some reason and that, you know, businesses are dealt with more stringently? I'd like to understand that question, please.
Okay, thank you so much. So the VAT Act applies to every business it applies to every business. The thresholds, they apply to every business. So the 1 million applies to every business. So if you start your business today, any business that you are starting, if your income or your sales, if you're selling goods and your sales do not exceed 1 million, you do not have to register. So that business, whether a company, individual, have to register.
Okay. Maybe I don't understand it correctly.
Yeah, you can proceed.
So let's say a business is earning 500,000 a year or annually.
Yeah.
In order to get their VAT back, or in order to get their VAT back, whichever they are expending within the business, then surely they have to register for VAT at SARS, isn't it?
Yeah. It's voluntary. It's voluntary. One can register as long as you do. Yeah, as long as a business can do more than 50,000, they can prove that they can do more than 50,000 in a given year. They can register voluntarily. But once you are registered, the obligation is on you to file returns. The returns have to be, you find they would remind you, they will penalize you for not filing returns.
Yes.
So it's voluntary. And then if you see it's giving you admin headaches, then you can deregister. You see, a business can deregister. They just apply and say, we are making less than 1 million. We want to deregister, then they deregister.
So do I understand it correctly? As an advocate, if I am earning, let's say, 1 million annually, is it incumbent upon me to register for VAT? I think so, it is.
Yeah, it is. You have to register for VAT.
So I won't have a choice in that case.
You don't have a choice in that case.
But businesses can choose.
No, like it applies to businesses as well as advocates. There's no exemption to say this is an accountant, this is a doctor, this is an advocate, this is a Pick n Pay, this is ShopRite. The exemption is the same. If you are doing less than 1 million in sales or in your fees, then you can choose not to register. But more than 1 million, one is to register.
You have to register. Okay. No,
one is to register. So the issue is that most people are not registered because of SARS does not have a proper system that can automatically pick up. Or when one declares income tax, sometimes it does not prompt an audit for VAT to say, can you check the income? It's now more than 1 million. They are not registered for VAT. They don't have such a system. So I think whenever you are picked, then that's where trouble starts.
Thanks for that. I understand it very clearly now. Thank you for that. Thanks for the excellent explanation.
No, you're welcome. Any other question before we can resume? I guess we are all fine. So we'll start with our example. I'll try to shorten it up because accounting can take forever. So I'll try to shorten it up.
Grace. Hello, Grace.
I said Grace. Hopefully you are able to see this. Let me try to enlarge. Let me try to enlarge. Okay, so this is our question that we are going to discuss. Our firm is a VAT vendor and it handles the following transactions for the month of June. You should forgive us. I saw we made an error of mentioning January, while we gave transactions for May. And I want to thank you. Most of you adhered to answering in May. So I'm happy that most people were clear on that to say we just made an error. So in this case, it's June 2021. So the most important thing is for you to check what you record, which accounts you need to present. So in our case, they need all the necessary cash books and ledgers, which means every transaction we should see how it can be accounted for. It's double entry, how it fits in a cash book, or if it's ledgers, which ledger is affecting which other ledger. That's what we need to do. And then when you look at these transactions, we should always, even in our assignment 2, always consider them to be for one firm. We do not mix up firms in this assignment. We just want to see if you can apply a trust account, a business account, petty cash book, everything, or conveyancing. We've got things happening in the firm. It's a lot of things that are happening. So we just want to see if you can integrate and see that this is one firm. Everything has to be accounted for in one firm, and then reporting is done globally, like we take our balances and then we report. Okay, and then part 2, it says balance of the accounts and prepare the trial balance for the business transactions and the trial balance for the trust transactions. As you know, we should separate between business and trust transactions. We should always try to separate, even when you are doing your ledgers, if possible, do your trust account. After doing your trust, do your trust at the bottom. Start on another sheet, do your business account, do the ledgers relating to the business, separate them, because if you kind of like mix them, it then gives you a headache. And also the Act says we should disseminate, they should show that here is a trust account or here are trust books and there are business books. I know some softwares mix up, but if you get deeper into them, you will see there's an element of separation. One is able to do it. Okay, so the trust account had an opening balance of 208,000, made up of 100,000 for Mr. J and 108 for Miss Magda. So this shows us that money that is in the trust account we should be able to account for it. We should be able to tell whose money, which file or which client holds what amount. So in hold, okay, so it makes it easy when we are preparing our ledgers to say our cash book already, we've got 208. When we do our ledgers, we start by splitting. We've got Mr. J, we've got Miss Magda, and then the next thing we treat the next transactions from there. Okay, I'm going to try to share our workings. Okay. Okay, this is the more of like a clean sheet. So we are dealing with webinar 2. And we are starting with our trust cash book. So our cash book, what we know about it, we've got the left and then the right side. We always have our date. We always have, okay, I'll start by saying let's have our receipts to show this side. We've got receipts, which are our debit side. And then the other side, we've got our payments, which are our credits. So I'm just allowing someone to, okay. And then we have our dates, our description. We have to describe our transactions. I see most of some of you guys, you are lazy to describe these transactions. You just write amounts. We mark, but we are not supposed to be marking. I'm now having technology challenges here. Okay. I'm trying to show you how to do your T accounts, how to prepare your T accounts. So basically, this is how you prepare your T accounts. Okay, so our debit and credit side, we can always copy like that. Okay, so we have to record our date. So in this
You
case,
can only see the word.
you are
part,
seeing
but
the Word document only.
Yes, we can't see the Excel part of your document. That
Okay, let me
should
try to
screen is
share
not shared.
again.
Please, thank you.
All right, let me try to share again. Thank you so much for letting me know. Let me try to share again. I'll stop sharing. Can you see it now?
Yes, now I see the Excel part, but not the questions.
Okay, so the question, you are not seeing it. You are not seeing the questions anymore.
Yes, only the Excel.
Okay, let me only the Excel. Okay, I will try to share the screen. Let me try to share the screen. Technological challenges. Okay, I will share the screen. Can you see now?
Yes, now we can see both. Thank you.
Okay, so thank you so much for trying. So this is I was just trying to come up with our template of our trust cash book. So this is how we come up with our template. And it's the receipt side and the payment side. I know now you know how to do this. And then we've got an opening balance, which is 1 June 2021. So our opening balance, there might be no need. If you don't have time, you don't have to split. Because remember, the money in the account, no one can tell that it's for this and that, but our ledgers are the ones that then ask whose money it is. Okay, so because our ledgers, they tell us that, we then also prepare our ledgers for the clients that we were told that we've got clients. So the next thing is our trust creditors ledgers, of which I've seen the bulk of you now know how to prepare ledgers. So I'm just assisting those probably who. So these are our ledgers. Okay, so our ledgers, then we have to show the client, and also our ledgers, we don't show them as receipts and payments, because you find it depends with the transaction. Sometimes you are reversing a particular transaction, so you can either debit or credit. So when we are treating it, it all depends on the transaction. You have to understand what the transaction mean. So usually your guide is your trust account to show you whether you are debiting or crediting. But in this case, because our trust account, we started by debiting the 208. Then our ledgers, we are told we've got 100,000, which is this one. And then we've got 108. So we've got already in the trust account, we've got 2 clients. You see? So we do the opposite. Our first client would be Mr. J. Okay, and then it's 1 June 2021, and it's our opening balance. And amount. Okay, I will skip the folios because we don't have time for me to link. Folios are there to link the transactions. So say, for instance, if you decide to say, this is my transaction 1A. So if it's your transaction A, you can then reference it to transaction A, or if it's transaction A1, then you match it in another ledger with A1. So that's how the folios do work. Okay, and then here, I will just format because our dates are not coming out properly. Okay, so they are now coming up. So this is for Mr. Jaden. For him, and then the next one, I hope you guys will be able to just copy and try to utilize so that you don't take time, because accounting can take most of your your weekend. And also we've got this Magda. It's 1 June. So this one, say if we say it's A2, then it's 108. So for you to reference, they need to mean the other leg of the transaction. It's an account here as our opening balance. So that's where we utilize the folios. That's how the folios are utilized. Okay. And then A, we attended to the file Jaden and we raised an invoice 15 June 2021 of 25,000, including VAT. We transferred our fees. So you need to pay attention also to when transactions are occurring. So that we raised an invoice, then it would mean on the business side of it, we have to raise an invoice. I just want to check in this case if ever there is a reminder to, okay. Yeah. Okay, yeah, you see. So usually we also indicate on the business side for you to be able to record these transactions from the business side as well. So when we raise an invoice, then it means it's a business transaction. We have to then go and create an invoice by we have to is the journal that relates to an invoice. So in that case, you would find we are debiting our client, which is Mr. J, and we are crediting VAT as well as crediting our fees. So that's what we do. For now, because we are dealing with the trust account, let me just see if I should raise that one. Okay, I'll add another sheet, which is this is our trust. And then this is for our business. So with our business, as you are setting up, you can as well just, you know that there's going to be a business cash book. So you can copy from your trust and then you change it into a business so that you know on top your templates are already set up. So you change it to your business. I hope you can see, you can still see this. Let me try to enlarge. Okay, this is our business book. And then on the business side, we are starting with what, like we are raising an invoice on the 15th of June. Then it will mean we have to, I'm just also going to copy a template so that it becomes faster. I hope you can follow through. Okay, so this is our general ledger. And we are dealing with our fee account. And also, we're going to deal with our debtors, which are our matters ledger, business matters ledger. Yes.
Yes. Okay, you'll be come back. Yeah, come back. Okay. Bowling past 5. Bowling.
Okay, may you excuse me? I need to mute.
I'm busy.
Aye.
Go for 6. And busy.
Okay, I have to share the screen. Are you able to see the screen? Sorry for that. I hope I have shared the screen. Stop sharing. Let's share again. Okay, we are back to our screen. Okay, so our business, we were on our business matters ledger, and or we call it a debtors ledger. Like in a normal business, they call it a debtors ledger. Then we identify our client. In this case, who's going to be our data. It's Mr. J. Mr. Jaden, and Mr. Jaden is going to receive an invoice from the firm, and the invoice we are sending it on the 15th of June 2021. And then description, it's our fees, and it's affecting our fee account. And in the fee account, we are told that the amount of 25,000 includes VAT. So in this case now, we account for our fee. So for our fee, then it will be 25,000 multiplied by 100 divided by 115. Why we are multiplying by 100 is that the 25,000, it's inclusive. So it's 100 plus, which is the 15% for VAT. And then the 100 is what is ours, divided by the 115, because it's inclusive of VAT. So this is the explanation why we use the formula like that. Okay, so this is how we then, it affects the ledger of Mr. Jaden. And then our fee account, when we go back to our fee account, I had not recorded on 15 June 2021. Then it's Mr. Jaden. We are obtaining our fees from, and how much of our fees are those? It's the same formula which we have here, which is 25,000 multiplied by 100 divided by 115. So that's how we determine. So make sure when you are treating your VAT, remember this. And then, but Mr. Jaden, we are not going to give him an invoice for 21,739. We are giving him an invoice for 25,000. So the balance is what? VAT. So for us to compute VAT, it's 25,000 and then 15% of that divided by 100 was 25. It's inclusive of fees and VAT. Then when we want to take out the VAT only, it's 15 divided by 115, like that. So if you can add the two, you can see they come up to 25,000. They add and come to 25,000. You see, so which is our amount that we are given, and then our transaction is not balancing. So if we can track it, let's track it. We will call it J1, and this is J1. And then the element of the fee, let's call it the VAT, let's call it J2. So if you can have a look at it, J1 is now balancing, but J2, it's incomplete. Then there's a missing ledger that is up to there, and then that ledger that will add in we are supposed to add in a VAT ledger or an account, VAT account, ledger account or VAT account, like that. And recording our J2. And how much is J2? 3260.87. So as we can follow through, J1 is now there, J2 is there. And to complete them, you find them here. And then to make up the 25,000. Hopefully you can understand this. Okay. And then we on B, we briefed Advocate Mahiba on the matters of Miss Magda, and he...
Sorry to interrupt you. Can I ask you something? With regard to...
And he rendered
a bill of
7,500, which we paid on 24 June 2021. Hello? Okay. All right, we'll proceed. So in this matter, our client is Miss Magda. So when we go back to our trust, this is a trust transaction. Yes? Are you talking to me?
Yes, ma'am. I wanted to ask something before you proceed so that I can get it quite very clear. It's just that
yes.
I don't see the screen that you have shared with us.
Okay. All right, let me try to share.
1,000, including.
Can I try to reshare the screen again? Okay, I'll share. Can you see it now?
No, not yet.
Not it. Okay, is there anyone who can confirm if they are still seeing the screen?
Yeah, we can see the screen clearly.
I can see this.
Yeah.
Oh, okay. So I don't know. Maybe it could be your from your end.
Yeah, I can see it. Yes.
Okay. You had you wanted to pose a question.
Yes, with regard to the 25% invoice that we've raised against Mr. Jaden. I'm still at part
25,000.
Yes.
Yes.
So, and that amount is inclusive of VAT. I guess the VAT for that 25,000, I do not know, but I'm subjected to correction. Is it not 3750? Because I'm
No,
trying to
it's
look
not 3750. It's not 3750. The reason why it's not 3750, we are not calculating. If we were told that 25,000 excludes VAT, then we were going to add VAT. But to our client, because if we add 3750, then it's going to be more. You see, it's going to be more. What we are presenting to the client is going to be more. But we are giving our client, this is your invoice, 25,000. It includes VAT. So we have to now separate. What is the VAT in 25,000? What is our fee in that 25,000? So that's how. So if it's including, you separate. It means the 25,000 is a whole. It's 100 plus 15. You get it? Or
Yeah.
we ask someone to explain.
No, I'm still trying to get it, the explanation from your good self, man. So our fee there, when we look at the amount given of 25,000, including VAT, so our fee is going to be 21,250.
It's going to be, okay, the way that I've calculated, if you can say 25,000 multiplied by 100 divided by 1, what do you get from your end?
25,000 multiplied by 100 divided by?
By 115.
By 115.
Yeah. $115. So 25,000 is equivalent. It's equivalent to 115%.
Okay. Where?
What answer are you getting?
Yes, I'm getting 21739, like the one that you are getting there. So okay, or maybe if I may ask.
So let me give you an example. Say for instance, our fees were 21,739, and we want to establish what is the VAT. So in that case, the VAT would be 15%. So our fees is 29,739. And we want to calculate that is not including VAT. So when you are calculating backwards, it's your multiplied by 15%. Like you see, that is your VAT. You see that it's multiplied by the VAT amount. And then when you are presenting to your client, you add them up, and then you come back to your 25. Okay, I'll give a simple example. Say, for instance, our fees were, our amount including VAT was 100. Usually, our fee is 1,000. Let's say our fee is 1,000. You see, like that. So here, if our fee was 1,000, I was going to come here and say we had an invoice for 1,150, including VAT. And then I ask you to work backwards. You understand?
Yes, I'm trying to follow.
Okay, I will leave you there because we won't finish. We won't finish. Okay. Just if you can't follow again, you can always after we do it again together, because we won't finish. Okay. Yeah. Okay. And then part B, and then we briefed an advocate. Mahiba, and it's a matter of Miss Magda, and he presented us with a bill for 7,500. So the thing that you look at, are we having money for our client in the trust account? Yes, we are told that there's 108 in the trust account. You tell your client, the advocate says 7.5, and the client, if the client says, go ahead and pay out of your trust account. So I'm going to minimize simple examples like these ones because we've done them before. I'll try to attack those are like a bit difficult. And then in this case, our client is Miss Martha, and it's for advocate. See, and then the amount 7,500, and then for the double entry, remember we are paying payment side, and then we go to our client. We no longer owe our client 108. We are now owing the client less. So 29 June 2021 for advocate from our bank account, and it's for advocate. And how much is it? 7.5. So this is how we record. We make sure that our double entry is complete. And if you want to follow up with your folios, you can follow, and once you name an account, a transaction, you follow it up with the second leg of the transaction. Okay, so we've done part B, and then part C says 30 June, bank charges were 98 and interest 408. So this is our trust account. You guys remember, it is not an overdrawn account. So interest that is given in a trust account, the account is receiving, our bank account is receiving that amount. So don't be confused with the business account, where when we are in overdraft, when we are running in a negative, the bank can charge interest. So this one is basically interest, and this is the interest that we are receiving, and then we are supposed to record it on the receipt, please, on the receipt side. I saw some guys were recording on the payment side. On the payment side, it is not interest paid, it's interest received. And then the bank charges, yes, now we are paying the bank. Then on the payment side, we record because we are paying, which is the bank charges. And how much is that? 98, just like that. And then you also need to do the double entry. So because our interest is more than bank charges, it means the net effect, we are going to pay it over to the LPFF. So that I'm doing is dangerous. Don't follow the way that I'm doing. It's very dangerous because the moment you record a transaction and you do not do the double entry, you forget. So do not follow the way that I'm doing. Just do transaction per transaction. One transaction, you make sure that you have recorded. So it's the bank, and it's interest, and it's 405, and we also have this, and it's the bank, against the bank, and it's our bank charges and how much. So this is the ledger that will balance off. The difference is what is payable to the LPFF. There are effects of VAT, of which in this example I will check at the bottom. There are effects of VAT. You find the LPFF has instructed the banks to say the law firm is supposed to recover the VAT from SARS. So when it comes to your bank charges, we are not going to accept the full 100%. You are supposed to what? The full 108, it's 115, the full 115, because it's inclusive of what? Of VAT. So they say pass on the VAT over to the law firm or to the advocate or to whoever who is operating a trust account. So when they are passing over, you find there is another transaction that will be on the bank account where the bank has recovered. It recovers that even from the business account. And then they say that 15% claim it from SARS. So that's how the arrangement that is there. So you should get used to it because all the statements, more of like FNB, I think with ABSA, I've not seen on NetBank, they have that transaction. So they normally call it redirected. They say VAT redirected or bank charges redirected. If they see the interest is not enough to cover bank charges, they redirect to the business account. And also, because of that arrangement, they also pay over the interest to the LPC. Okay, so we are done with our 3 transactions. We are done. I'm going to skip the business account. And then let's attack the conveyancing transaction because we won't finish. Okay. Oh no, remember it's one firm. It's our firm. We are continuing. We are getting instructions. On top, those were just summaries of what happened in our firm. And then now we are getting instructions to say the firm is instructed to transfer a property from Mr. Jaden. So say Mr. Jaden is running several matters with our firm, which is acceptable and allowable. Then in the conveyancing matter with Mrs. Vilakazi. And then on 6 June, the firm received 850,000 from Mrs. Vilakazi for the purchase of the property. So the firm is receiving. What do we think of? We then go and think of our cash book. We start receiving 6 June 2021. And it's Jaden stroke Vilakazi, because we'll create a ledger like that. Yeah. How much? 850,000. So this is for our conveyancing matter we've received. And then we go and create our ledger as well. So I'm going to leave out this one of Mr. Jaden. We assume it's another matter. And then this one of conveyancing, we create its own ledger account. So it's Mr. Jaden versus this is Vilakazi, like that. And remember, the trust account is already, it has received 850. So in this case, we are crediting because we have debited already, like that. So our description, it's our bank or our trust cash book. And how much are we receiving? We are receiving 850. Okay, so we are done with that part of A. And then it says Mrs. Vilakazi instructs the firm to invest the money in a Section 86.4 account. Immediately open a Section 86.4 account at the bank and transfer the money therein on 8 June 2021. Okay, so which of our accounts are affected? So in our trust account, so it's now moving from the Section 86 account. So we can start by recording that transaction to say money is moving out to a Section 86. So you come back to your trust account, you have to be moving, switching from one end to the other. So it's our ledger for Jaden and Vilakazi, and then we are paying into a Section 86.4 account, just like that. And how much are we paying? 50, we're paying everything to that account. So when you balance at the end of the day, what has come this side is the other side, it has been paid out. We are left with a zero, but we then need to record this transaction. Where are we taking the money? We are taking it into an investment account. So what I'll try to do is that I'll create space so that we will create our investment account. So it's our section 864. It's for Mrs. Vilakazi. Remember, the bank statement also has to read to show that it is for Mrs. Vilakazi. And I'm just going to copy the format for the sake of the time. I'll copy the format. Hopefully I'm not confusing you a lot. I'm trying to just be fast. Okay, so after copying the format, we delete and then we record. So in this case, it's our 850. We are investing it in a section 86 for Mrs. Vilakazi. So this is more of like an investment account, like a trust cash book. Because the account that we are opening at the bank, that will obtain is statements for, and then 8 June 2021. So it's from the trust bank account, and how much? 850,000. So this is how you record. And then to complete this transaction, it's not complete the way that I've done it. So what has happened is that the LPC now requires to separate creditors. So if money is not in the trust account, that money, if it's in an investment account, then we should have a creditor in the investment account. We can't say the creditor is under trust because it's no longer a trust creditor, it's an investment creditor. So they want to, like, reporting to be done at the end of the year to say how many creditors do you have and what are their balances as investment creditors. So in that case, we are forced then to move, like in this case where we have our ledger for Mr. Jaden and Mrs. Vilakazi. We are forced to move this 850 because it's no longer in the trust account. It has to move to an investment ledger, which when we get it back, we close it, we come back to the trust account. Hopefully you get that one. It's complex, but so we are moving our 850,000 to an investment ledger. So here we create our investment ledger, but our investment ledger is for Mrs. Vilakazi because she is the one, not the whole transaction. She's the one who is investing her money. So in this case, this is the transaction for investment. It's knocking off what we have received to show that the money is now in an investment. We also record it like that. So this one, we are more of like transferring from their ledger, the Mr. Jaden and Miss Vilakazi is conveying ledger. That's where we are transferring into the investment ledger. So here, the transfer relates to that one. Like that. So our ledgers are complete. So I'm recording on folio. We're supposed to record on the amount. Like that. Our ledgers are complete. I'm going to pop up our Excel so that you can more of like follow through, try to follow through. Okay, so this is our trust account. And then with 850, and then now we have invested it. Initially, we received 850, and then we have invested it here. So because we have invested it, we've paid it out of the trust, and then paid it out of the trust, it's coming to our investment account. So this is this one relates to that one. Okay, and because of reporting issues, we have to report our creditors according to whether the money is in trust or the money is in investment. It means we temporarily close the account of Mr. Jaden and Mr. Vilakazi because there's nothing in the trust account which they're holding. So how do we close it? We debit them and then we credit the account for Mrs. Vilakazi because she has instructed us to invest. Okay, hopefully you understand. Any questions? We can proceed. Okay, the other transactions are simple transactions. Like 9 June 2021, Mrs. Vilakazi deposited 23,000 for the transfer costs. So we are told transfer duty 7.5, transfer costs, which are your fees, your petties, your, I don't know, things that you pay, 500. So if you can add it up, it gives us back to 23,000. So for us to record it, the split is just done for you to know that, okay, this was meant for that, this was meant for that. And also you should note we have not applied any rates or something. We're just doing simple mathematics, just illustration purposes. I know our amounts of 850,000, one is not supposed to pay duty, but for the sake of us, just ignore those computations. Here they are not necessary, unless if we specify and say compute. So normally we just give you an amount, but you would find sometimes it's not applicable. Okay, in this case we receive this is the matter that we are receiving for, and how much are we receiving? 23,000. And we can always indicate if it's the cash amount, if it's a deposit, we say it's a deposit. And this one, if it's for transfer cost, we indicate transfer fees. Out of that, when we record it like this, then it also means we have to go to the ledger and record the amount. So in this case, to shorten up time, I'm just going to try to copy, and it's relating to our ledger, our conveyancing ledger, which is this one. And then we paste like that. So we are doing the double entry. It shows we've received 23,000. So every transaction, you make sure you do the double entry. And on 10 June, Mr. J deposits 7.5 for the rates and tax clearances. So it's the same. June, we are the trust account is receiving for this matter, and it's for rates for the municipality. So you can always enlarge, and then how much? 7500. So this is our trust case received, and then 7,500. And then we also take the same transaction, remember, we come to our conveyancing matter, which is this one. We also put it there. Okay, and then 17 June 2021, we pay the municipality an amount of 7,500 for the rates. We received the rates and clearance. So there is a payment to trust cash book, and then we ensure that a payment is effected. So our payment is for rates to the municipality, and it's 7,500. Okay, we also take it. This is the credit side. So we are going to take it to the debit side of our ledger, just like that. Okay, and then we SARS an amount of 7.5, and we obtain the duty. So it's more of like the same. So our conveyancing matter is going well. We are obtaining our certificates, and we are also recording. The most important thing is to make sure that we record. Okay, it's transfer duty. And how much do pay 7500. And to make it easy, you also copy your transaction, you take it to your ledger, to your meta ledger. This is your trust account, simple, it's against the ledger, and then you post. And then 24 June, we lodged the documents. The property was registered on 27 June 2021. Okay, now we are already set, registered. And then 29 June 2021, we withdrew.
Ma'am?
Yes.
May I ask, please? I just need to follow. On this transfer, the 7,500, where's that?
Yes, the 9th June.
Where is it now? The one with the transfer code, 7,500. It's inclusive.
The one with the transfer?
Yeah, transfer cost, 29 June.
9th June.
It's a inclusive.
The one for.
Inclusive VAT.
Okay, this one which is inclusive of VAT.
Yes.
So it's transfer duty of 7.5, transfer costs 15,500 inclusive of duty. Yes.
Yeah, I need to ask, when do we calculate VAT actually to show VAT on our account? Do we have to calculate VAT only if we are opening the VAT account? Do we have to show a VAT amount?
The VAT, yeah, the VAT we only calculate it on the business side. On the business side.
Okay.
Yeah, so when we are invoicing, now we are told it's time for us to invoice. Then that's where we then go and say, oh, okay, we are invoicing 15.5 because here we haven't worked.
Oh, yes. We're just being told.
So,
how much?
Yes, we are just told we are receiving it, but we haven't worked. Yeah.
Okay, I got it. So we will only show VAT on the business account.
On the business account. From the trust account, we'll transfer, when we are moving money from trust to business, we'll move the whole 15,500. We are not going to split and say VAT or what on all the transactions. We do not split. We just show the full amount, we move it to the business side. And then the business side, that's where we then say, oh, okay, now we need to account is our account should be net of VAT. The VAT in the VAT account. And then the total amount, of course, it's coming from our client.
So we will only calculate VAT only if we
That's
are
where we
inclusive VAT.
We only calculate VAT when?
Well, are we only calculating VAT amount only if we are told that the amount is inclusive VAT? If they don't specify that the amount inclusive VAT, we don't calculate anything.
Yeah, so you are told for ease of clarity on these questions, we'll say the amount is inclusive of VAT, or we can tell you the amount, this is our fee excluding VAT. So we will say our fee for opening a file, the 1,000, but that 1,000 is excluding VAT. So if the money is in the trust account and you want to transfer that fee to the business account, so obviously you are going to transfer fee plus if we say our fee is 1,000 and then the VAT it's inclusive, it's excluding VAT. Ne? If I say excluding VAT, it means 1,000 is just for the firm. So when we are moving money, we then have to combine the VAT to the business account so that when we receive it in the business account, we pay over to SARS.
I
understand. Ne?
I understand. Now we can move. Yes, thank you very much.
Okay, all right. And then 29 June, we withdraw the money from the investment account. And then the investment account is earned 3,300. We paid to them. We also transferred our fees to the business account, you see? So this is now more of like our accounting. We are told, okay, there's 3,300. And then from the back of our mind, we should always remember there's 5%, which is due to the fund. And then on our fee, there's VAT, you know, all those things. You are the accountant. So you should always know all those things when you are told to account. Let's record, let's quickly record. So we are withdrawing the money from the investment account. Let's go to our investment account. So our investment account is sitting with 850,000. This is the investment account for Mrs. Vilakazi. Because we want to take it. The first thing that we account for would be the interest, because now the bank has deposited what? Interest money into our investment account. So on our statement, we always see the interest money just so this is a mirror of our investment account bank statement. Yeah? So whatever that you do, just think like the bank, to say the bank is going to put in money. And then when they put in money, if the bank is going to pay the LPFF, then how much are they paying? They are paying 5%. So on 29 June 2021, and then we do that LPFF payment. How much are we paying? 5% of the interest amount. How do we calculate 5%? Interest multiplied by 5 divided by 100, or it's 5 and then you put your percent. Then this is the amount that is payable to the fund. So this is a mirror of basically the what? The bank statement. It will show like this. And then it will also show that then to the trust account, then they are going to pay the difference. So it will be our 850 that is going to the trust account plus 3300 multiplied by what? 95%. So that is what is going to our trust account. I hope you guys understand. So if you add the two sides, you find we get they should balance. They should balance off. So this is our investment account. I'm just kind of like a bank statement. It would more of like have these transactions. Okay, so what I've done is that I've done one leg of the transactions. I've recorded one side. So let's start with the interest. 3300 is what was earned, but to our client is not going to receive 3,300. So on the client ledger, not investment ledger, which is the last. What belongs to the client is 95%. On investment, or you can say investment and then coming from the investment ledger, and then it's interest like that. So the client, what belongs to the client is 95%. So you see, that is what comes to the client's ledger. So that when we are paying back into the client's ledger, into our trust ledger, the client is just going to receive the 850 plus 3135, because the whole 3,300 does not belong to the client. Okay, and then the 5%, let's move and do the 5%, which is this one. This one, LPFF. So when we received the 3,300, we have done one leg. Now we need to do the second leg of the 5%. So I'm going to create a ledger. So the ledger that I'm creating now is to cater for the 5%. And the 5% belongs to who? It's the fund. Legal practice fidelity fund. I hope you follow. And how much is the fund receiving upon withdrawal? So upon withdrawal, the fund is receiving 5%. You see, like that, with 5 interest, which is due. So to complete, when we pay over to the fund, so the first entry that I've done, it's for the 3,300. So to split the 3,300, I've split it by 2, which is that one. That is the split that I've done. And then the second transaction is for the payment, the actual payment now. This one was just showing accrual. We are told there's 3,300, then we accrue for it. We show it in our books. We do our double entry in our books to show that there's that 3,300, you see, in our ledgers. So this is where it goes. And then now we are paying. Now we are paying because I had paid, I haven't recorded. So this is the payment part. You see, PFF. This is a bank account, an investment account. So out of an investment account, we can pay. We can pay. So when we pay like this, it means we also need to what? To do the double entry for this transaction. Then we take it to the LPFF ledger, which is this one. You see? So here they were accruing, they were receiving, there is interest that is accrued. Here we are paying. So it's a payment to the LPFF. We received, we paid, closed, ledger closed, we are done. We've invested, we've paid the LPFF. And option is this one. You see, now we are paying back money into our trust account. We are paying back money into our trust account. I'll paint it purple. So if we are paying back money into our trust account, what is happening? Our ledger is closing. Our investment account is now closing. And our trust account is what? Receiving. You see? To receive. So how much is it receiving? Plus 95%. Because remember the rules, they say that money should be paid into the trust account. From investment, it should come back into trust. And then from the trust account, you can then pay the various parties. Okay. It appears the conveyancing matter is going to finish all our time. And let's move on. We have paid, and then now we want to close. We are going to close our, I'm going to minimize so that we can see. We are going to close, this is our investment ledger. Remember now our investment account is closed. So we don't need an investment ledger anymore because the money is now in the trust account. So we are now closing it as well. 29 June 2021. So we are closing it by transferring money back into our trust ledger for our clients, Mr. J and Belakas. We are transferring back. And how much are we transferring back? The total amount, which is the 850 plus the 95%. You see? So that's what we are transferring. Okay. So this is one part. And the second part, we are putting money back into our client's ledger. You see, we put it back. So there's 1, 2, we are balanced off. And then the one for the trust account, it's balancing off against the investment account. You see, this one, that one. So there will always be 4 transactions for taking money back, 4 transactions for investing. So you should always, yeah, get that that part. And then we are told that we can now pay Mr. Jayden and Mrs. Vilakazi, and we can transfer our fees. Okay, so how do we pay? I'm going to open okay. Remember, our transaction is based on 850, which means to Mr. Jayden as the seller, we have registered the property, we are paying him. So for us to pay him, we come back into our trust account. The money we have received it from investment, and then we are paying the client, the seller. So if ever there was any estate agents, then we also pay the estate agent. We ensure that we've paid. How much are we paying? We are paying 850,000 because their transaction was for 850. And then we are told we can pay Mrs. Vilakazi. So she's got 95% off. So in purchaser. So if ever there was any refund which was due to them, we also calculate and see if there's a refund, anything that is due to them, and also we then pay them. So what we are paying here, it's 95%. Okay. By 95%, like that. So we are paying our purchaser, and then we are also told that the firm can take its fees. So it's the same matter. It's the fees, and remember our fees that we're talking about, which was 15,500. We are now transferring these fees to the business account. So on the business side, it creates a lot of what? It's a lot of work that we are creating. It means we have to invoice, we have to split VAT when invoicing, and after that, we just like what we did with that transaction, it's the same. We separate, we treat it the same way. And then when it comes to these transactions, post Sorry for that. I don't know. I got booted out. I went out. So yeah, this is how we record. So our conveyancing transactions, we had finished, and it's now 6 p.m. I guess what we can do is that if okay with you guys, we can arrange, if you are still fine, for another day, for an hour, even Thursday, or next week we arrange for an hour. I think Thursday for an hour. Then we can do the correspondence transaction, because that one is a bit other side. So I know you might find it very challenging. So you may raise your hands, or you can put on your chart, and then we see those who are voting for us to do on a Thursday. We can ask Grace to add an hour for us from 4 up to 5, or 4 up to 6 on Thursday. Then we can tackle. We really need to do that example. I hope this one was good enough for you. And what I will do also is that I will more of like post that example that we were doing for the conveyancing, and then I'll also post the question on the forum, or I'll announce it so that you get it. And then on Thursday you can go through, and then on Thursday we can quickly attend, or I know it's a challenging one, correspondence, so we really need to do it, but let's do it on Thursday. I'll ask Grace to give us an hour for us to attend to it. And I can see most of you, let's see, oh, only 3 people are saying I see only 3. Okay, got 4, and in total, how many are we? Let's count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. So in total, we are about 19 or 20. So far we've got 5 people. But what I would do for your benefit, for those 5 people that are willing, I'll ask Grace on meet, and then we do the correspondence matter. I will try to make it short, because it's also short. It's a collections matter from our correspondent. Then I show you how to record. Thank you so much for your time. Let's meet again on Thursday. I know it's off schedule, but we have to do it. I'll open up for those ones who want to go. You may go. Those who want to go, you may go. For those ones with questions, you may probably pose some questions for the coming 10 minutes, then we can call it a day. Hello, Maswera se. That's weird.
All right. Ukuthi battery cable. Kwanza kuchini. But moisa for now. CI maybe 40.
40,000. Okay.
If you ask me, it's sort of email.
Good there.
You put by the recondition here, you take which key, Ragasso. For time, I'm going to pass.
Okay. Okay.
Then it only was one instrument that's not to think.
All right.
The Kutuagango take that to go copy. That's right. And it's right to get 10 seconds. That's your Abanaku thing.
Okay.
Like when it's put empty characters or 10 seconds. You don't walk up to that, but that's replace the rest.
Okay.
Yeah. The main one, that's
Okay. Saka tinenge titokwanisa kuzoita marifoni. Zvinhu zvachona zvatakanga zvinhu zvachona zvanga zvakubatirizwa tine nankirike. Tine ma-invoice. Tine ma-invoice. Yes. Okay. All right. Okay. All right. Okay.
Saka apa kune kurungoni akisarindide imwe ikade yakatoitwa
Kudhara.
kare.
Okay.
Manhingi edu materials akazwe. So because ndinoita kuti so that toita official ngekuti no takazo authorize instead yekureplay tenga chinyuwani kwakuita sort of reset.
Okay.
Yeah. So go to upgrade instead yekutenga chinyuwani.
Okay.
It's for auditing paper. Kana ngoti munongoti as the site
discussed a.
But as the site.
Okay. Site meeting.
Our cost now. We're trying to put money price was even a February, but after all that was 1 July. Even after my increases in my price. Yeah.
No, okay.
So, is there any, or maybe what are the chances they would GT adjust for us to recover because they buy?
Okay. Saka ndoita comparison my prices before and after. But because state sheet just take out kunzi mari totudi. That one is just to say to endesa like kwamuru ku confirm what no site and discussions in our meeting. This is what we ended up doing because of Nangrema prices were higher. Tongo is it's fine like that. And inini ndikazobvunza kuti how much tozoita sei oh, for audit purposes. Okay. Oh, all right. Ah, all right. Okay. So the party yachona want to mirror materials the party yachona. Oh, all right. Oh, then you mean Obama respond. I know it's fine then. Yes. Okay. 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 Oh, okay.
Yeah.
All right. So I'm going to say 40. Because I understand Greek, I must makati it's 60 days. Sakande inenge to 18 December. 19 December.
That one it is. Okay. All right. It goes to default. So I